A shortened trading week for stocks, currency, and bonds. The Philippine Stock Exchange, the Bankers Association of the Philippines, and the Philippine Dealing System shut Monday's trading in the wake of Typhoon Karding. Investors will return to the virtual trading floor on Tuesday, digesting news on the extent of damage to lives and livelihood. Trader Luis Limlingan of Regina Capital hopes the losses will be minimal. That's because the wider the farmland affected by Karding, the higher the risk prices will rise, especially of the staple rice. The typhoon cut across central Luzon, the country's rice granary. Already, white-hot inflation had been a bane to stocks, which lost nearly 300 points or 4.4% in a matter of 5 days last week. The weak peso is a double punch to equities, according to broker Jafet Tantiangco of PhilStocks. The peso was last traded at 58.50 against the dollar, its worst finish in history. But property shares stand to gain from that lackluster currency as OFWs send dollars for condominium purchases. More pesos exchanged from a strong dollar softened the blow from rising mortgage rates for listed developers like DMCI.
Our sales have been in an upward trend since the second quarter of the year. We are actually on pace to hitting our sales target for the year, which will come out to be more than 30% higher than last year.
DMCI has set aside 20 billion pesos in capital spending for the next 5 years, a sign that companies see no credit squeeze for their expansion despite rising borrowing costs. DMCI shares last fetched almost 10 pesos each, unchanged from the previous session.
We remained agile in providing very flexible payment options to our buyers. Some of our projects as well are still will be due for bank drawdown maybe 4 to 5 years from now. We are still able to manage actually the effects of the rising interest rates.
Analysts expect the peso to extend its losses against the dollar when trade reopens Tuesday. The PSE index, meanwhile, could hit the floor and sink further deeper to 6,000. Expect more dollar buying too, as fund managers clean their books as September draws to a close. Even Fitch is not bullish about the peso. It now expects the central bank rate to end the year at 5%, from just 4.25% now. But still not enough to match the Fed's hike that gives the dollar its solid strength. Lois Calderon, CNN Philippines.